Master of Doom, Marc Faber, is feeling gloomy about Canada. This is from the Globe and Mail. I guess that's a Canadian paper. Marc Faber, editor and publisher of Gloom Boom and Doom Report, was late to arrive to our Tuesday live discussion at Inside the Market alongside David Rosenberg. But we posed some of the questions you left for him in a later telephone conversation. Before we did, however, we couldn't resist asking him about his views on Canada. Not surprisingly, the famed economist known for his contrarian and often pessimistic bent didn't exactly offer an uplifting view. I think Canada is a case where you have huge leverage in a private sector and where the economy is slowing down, where you have a strong currency and where the price levels are now relatively high. Dr. Faber told us from Thailand, "I don't think Canada is very inexpensive anymore. I travel there all the time. It's rather on the expensive side. I think there's a significant risk to the Canadian economy." The real estate market is key to his sour outlook of Canada. He thinks the Canadian housing market may very well be in a bubble territory, not just in Toronto and Vancouver, but also in other major cities, such as Calgary, where there have been significant price gains in recent years. He's not necessarily calling for a crash, but he suggests there certainly could be a significant depreciation in real estate values ahead. Dr. Faber says the policies of the Bush and Obama administration in the U.S. have made Canada look good by comparison as a place for foreign real estate investors to park their cash. But on recent visits to Canada, he observed a significant disconnect between selling prices of homes relative to what they really should be worth. The precarious state of the housing market has made Canadian banks more risky investments. Dr. Faber doesn't follow the Canadian banks that closely, but observed that Canada, like Australia, has higher household debt than in the U.S. With the higher leverage in Australia and Canada, I think I'd be very careful about any lending institution. Is it a good time to buy gold? Jay Bernstein. Nobody knows whether it's a good time to buy gold or not. As I have reportedly said in my reports, I buy gold every month, and on the recent decline, I bought more at $1,400 and have an order at $1,300 and one at $1,200 and one at $1,100 an ounce. But they were not filled, just the $1,400. I will never sell my gold. As I've repeatedly told people, my maximum allocation to gold at the present time is 25% of my assets. He believes having 75% allocations in bonds, cash, and real estate and equities is prudent, given it could offset any further tumbles in precious metals. Question. Dr. Faber, you have indicated that you believe there will be a market crash this summer. Can you tell what might precede such an event? Bill. Faber. What was the trigger of the 1987 crash, when markets fell 21% in one day? What was the trigger of the NASDAQ crash in 2000? What was the trigger of the Japanese crash in 1989? What was the trigger of the 2007 crash that brought global stocks down 50%? We don't know about these things ahead of time, but something will always move markets up and something will always move them down. I would guess at the present time, given markets from 2009 lows have in many cases increased by as much as 100%. That they are no longer very cheap. Something could come along, geopolitically or otherwise. I would be very careful being overweight equities. I still have 25% in equities and 25% in corporate bonds. He says he feels deeply uncomfortable with that much allocation to equities, but also doesn't want to shut stocks out entirely, given the possibility they could still rise significantly before a correction. In 40 years, I've been working as an economist and investors. I have never seen such a disconnect between asset markets and the economic reality. Asset markets are in the sky and the economy of ordinary people is in the dumps, where their real income adjusted for inflation is going down and asset markets are going up. Something will break very badly. Okay, there you have it. He's on the totally opposite side with Hugh Hendry, and even the other Dr. Doom, I forgot his name. The guy with the heavy accent that talks a million miles an hour. He's also thinking it's time to buy stocks. Thank you.